Money Control and Mirae Asset Mutual Fund present Mutual Fund Banega Best Friend Forever. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hi there, I'm Sonal Mehrotra Kapoor and welcome to MF Banega BFF on moneycontrol.com, brought to you by Mirae Asset Mutual Fund. Now today we are here to make mutual funds your best financial friend. Just the way you understand your BFF, this show will help you understand mutual funds in a much better way, ताकि आप informed investment decisions ले सकें. चलिए शुरू करते हैं आज का शो MF रनडाउन सेगमेंट के साथ और जानते हैं कि इंडियन म्यूचुअल फंड इंडस्ट्री के लेटेस्ट अपडेट्स और ट्रेंड्स क्या हैं.
Money Control presents MF Rundown.
सबसे पहले सेबी ने म्यूचुअल फंड्स को ओवरसीज फंड्स में इन्वेस्ट करने की परमिशन दे दी है, बट विद अ कैप of 25% on exposure to Indian securities of their net assets. In October, mutual fund houses reached a new record high in net equity investments, hitting 91,433 crore, the highest level in the past year. Now, this net investment September के नंबर का almost triple है और May के previous का भी double हो गया है. Year to date, mutual fund investments in equity schemes में 3,70,000 करोड़ का net inflow देखा गया है, जो पूरे 2023 के 1,70,000 करोड़ के comparison में काफी ज्यादा है. सेबी ने प्रपोज किया है कि AMCs नए फंड ऑफर्स के थ्रू कलेक्ट किए गए फंड्स की डिप्लॉयमेंट के लिए क्लियर टाइमलाइन स्पेसिफाई करें. The funds should be deployed within 30 days with an extendable period of another 30 days. All right, now let's dive into today's topic. The tug of war are mutual funds pulling you in two different directions, equity and debt.
Money Control presents DIY MF.
And to help better understand this topic, joining us today is Charmi Shah, co-founder of Torrent Services LLP. Welcome back on the show, Charmi. Lovely to have you, as always. So, the ongoing geopolitical crisis that's happening, slowdown in corporate earnings, have been a sort of a party spoiler, right?
Yes.
And this is making investors really confused on what should they really invest in, equities or debt, given the very high interest rate that is prevailing in the country as well. So do you have a way in which we can advise investors how to have the best of both worlds?
Sure, definitely. So there's a very beautiful category in mutual funds, which is hybrid funds. So the name itself says it's a hybrid. So it's a mix of both equity and debt. So there are different types of hybrid funds. There are aggressive hybrid funds, there are conservative hybrid funds, there are multi-asset allocation funds, then there are then dynamic asset allocation funds, arbitrage funds, equity savings funds. So each and every category is distinct from each other. Multi-asset allocation is also one of the beautiful category which one can look for a longer term horizon.
Right. Right.
Yes.
So these are lots of options. You've spoken about aggressive hybrid, conservative hybrid, balanced advantages, multi-asset as well. But how to choose which one to really go for? Is this also goal oriented?
So yes, goal can be like anything. If you have maybe a goal of within 1 or 2 years or maybe 3 years, then balanced funds are actually advisable, where it's a combination of both, because I consider balanced funds as, the lanes of the street. Lane 1, lane 2, lane 3. So whichever lane we are in that vehicle, वो lane कभी आगे बढ़ेगा ही नहीं. If I am standing in the second lane, the first and the third lane will go ahead. If I shift from second to third, then the first and second will move on, right? So we always have that FOMO bolo that thing कि मैं जहाँ पे हूँ वो बढ़ ही नहीं रहा है. So balanced fund or hybrid funds can act very beautiful in this case, because the equity, the growth of the the equity markets, you can participate in the growth strategy. Second, for the debt, for the interest rate cycles and all movements of that particular category, you can be part of that category also, and gold, as we have seen, there's a lot of improvement or rather growth in last 1.5 years in gold as a asset class. So here the best of all three worlds. I'll not even say best of both the worlds. It's a combination. It's a trilogy, if you can say.
Yeah.
Equity, debt, and commodity. So it's a beautiful combination, and one can look for as a short-term goal, as a medium-term goal, as a long-term goal as well.
So, but what part of the portfolio should actually be hybrid versus your larger kitty?
Depending again upon the risk profile of the particular investor and the goal, but if I have to generalize, you can consider close to 20-25% of the portfolio as a multi-asset allocation or maybe hybrid funds, because they will sort of give you good stability. And see, charte market mein sabka paisa badhta hai, so everybody would like it. But when there is some kind of correction or minor knee jerks, and also in that case the asset allocation funds or hybrid funds can act actually as a cushion.
All right. Thank you, Charmi, so much for joining us. Lovely to have you as always, and for decoding all those, topics for us. All right. It's time now to move to our last segment on MF Banega BFF.
Money Control and Mirae Asset Mutual Fund present Mutual Fund Banega Best Friend Forever.
The segment is here to help you get a lowdown on how mutual funds operate, turning them into your ultimate financial buddies. And joining us today to shed some light on this is Suranjana Bodhakur. She's the head of distributions at Mirae Asset Investment Managers India. Welcome to the show.
Thank you. Thank you so much.
All right. I want to start by asking you on how do hybrid funds manage allocation between equity and debt, especially, in this volatile market that everybody sort of keeps talking about. And in these conditions, how do fund managers take decision to shift between, say, equity and debt?
Yeah. See, firstly, hybrid funds have multiple categories under them, right? So all of these different categories have a different fitment in the client's portfolio, and the asset allocation within the funds is decided as per the category they belong to. Now, if you see in hybrid, there are broadly around 6 categories that are there. Like you have the conservative hybrid category, where you have an equity allocation of definition somewhere around 10 to 25%. Rest of it is in debt. This category is somewhere around 28,000 crores in the market today. If you look at the aggressive hybrid category, which is opposite to the conservative hybrid, the equity allocation is somewhere around 65 to 80% by definition, and the rest of it is in debt. And this is a category which is one of the largest ones, which is 2.3 lakh crore is the AUM that you manage under this category. The third category is the balance advantage. So the balance advantage is, again, it's actually the largest hybrid category today in the market. It's about 2.9 lakh crores today, and this is a category which does not have a very strict definition. So there is a lot of difference that the fund manager can make in terms of deciding what is the dynamism that he wants to carry out in the fund. There is also the multi-asset allocation category. Multi-asset, if you see, is one of the most evolving categories. If you see in the last 1 year, there has been about 135% growth which has happened in this category, vis-a-vis like a 30%, 35% in the aggressive hybrid and the BAF category. Why multi-asset is becoming very popular is because it will give you an allocation or give you one product which can be a solution product for the client. It will give you allocation between the equity, debt, the commodity part, or it can also have provisions of getting into international equities, or it can also give you exposure of REITs, InvITs, etc. So it's a very dynamic option that you have, which is why it's becoming very popular. Then you have the category which is also the equity savings part. So equity savings is actually a category which is managed a little conservatively in the market, where the equity exposure is not very high. Now, when you look at the fund management side, when they look at within these broad frameworks, they will look at an allocation of whether the fund should be aggressively positioned, moderately positioned, or is it going to be conservatively position. So within that, when they create that, they will use different valuation parameters Or there could be like, parameters which could be momentum parameters or something. So valuation, they could use like a combination of maybe PE, PB. They could use parameters like, bond yield and earnings yield spread, which will show the relative attractiveness of the different segments. So with a permutation and combination of these different factors, the fund manager can actually create a nice portfolio which can be a fitment for the client.
Yeah, but this is a very sort of dynamic allocation strategy. This must depend very highly on the capability of the fund manager as well.
Yeah, it does actually, because see, there are different parts to this actually. If you see in terms of how it is broken down for the fund manager, I think the first part is, let's say it's been a market like it has been in the last 1 year or so, the equity part will play a very important role, right? Because the return generation, large part will happen from the equity side. But it's also important that within that equity space, how are you positioned? Is the fund manager taking large cap exposure, mid cap, small cap? How are they positioning it? And are they dynamically moving within that? The other part is also that how, as a fund house, do you pick up the underlying stocks? How do you do the stock selection? That process will also determine what the outcome is going to be, right? So these are different parts which will contribute to the returns that the fund manager can create. But important part is also right now, if you see, usually debt is looked at as a cushioning part of the portfolio.
Yeah.
But in a market like today, debt will actually generate very good returns. So positioning within the debt side, what papers you're selecting, what is your maturity, what you're expecting out of it, how you position that within the portfolio will become very important. Also today, if you take active allocations in commodities, we all know that there are a lot of geopolitical stress that's been on across the globe, right? Commodities have been doing very well, exceptionally well in the last couple of years or last 1 year. Going forward also, if these uncertainties remain, commodities will definitely help in generating that additional alpha as well.
Yeah.
And then you take active positions in international, or you take active positions in REITs, investments like I mentioned, that the role of the fund manager of expressing what they want to do in terms of allocation within portfolios is actually very beautifully managed in the hybrid category, because they actually able, like especially in like a category like BAF, they are really able to express what they feel in terms of positioning at that point in time.
Let's talk about risks.
Yeah.
And when it comes to hybrids, what are the kind of risks that you would want our viewers to stay sort of, on top of?
Yeah. So, for investing in hybrid, the best part is that the intent of a hybrid product would be to mitigate risk. Because what you're doing is essentially diversifying. You are not taking the risk of only one asset class, you're taking different asset classes, therefore diversifying, therefore reducing your risk. But having said that, there will always be an inherent risk of the underlying asset classes, right? So let's say equity, for example, if there is a volatility, that risk will remain with the, depending on which category. Let's say they get into the aggressive hybrid category, the client gets in there, they have to be ready for the amount of equity allocation that it has. It will have the, similar kind of risk associated with it. In the debt side, there will be the risks which are associated for the debt segment. So, for example, your interest rate risks. If the interest rates start to go up, doesn't bode very well for debt securities, right?
Correct.
Then there is credit risk. So, if there is some kind of default that can happen, there is liquidity risk that is there. These are debt segment risks, which are the obvious ones. There is also a risk of the commodity side. So if the commodity cycles are not playing very well and you are in a multi-asset segment, maybe the commodity part does not really contribute to the return.
What kind of problems can hybrid funds actually solve for clients?
See, a lot of times clients who have seen the markets have been doing very well, but the client may be very averse to not looking at, they don't want the downside. They just want the upside, right? So they're a little scared of the drawdowns. So because they are scared of the drawdowns, they don't start the investment process at all. A lot of people keep sitting in FDs because they think equities, they will lose their money. So I think that's a problem which hybrid has started to resolve. A lot of new investors have been taking the hybrid route to start their investment. I think one important thing which hybrids do is also, see, when, let's say, last 1 year markets have been doing very well, okay? Now you know that debt is also going to do well from here. Let's say you are managing different asset classes differently on your own, then you have to cut your position in equity and increase in debt, right? So but when you do that, there is a tax incidence attached to it. But when a hybrid fund is doing that, the fund itself does not attract a taxation. So it becomes tax efficient route of doing it. Thirdly, if you see that, a lot of times what happens is there's a chasing that happens in the market. So if markets are doing well, clients invariably want to keep following this upside and keep investing more and more. So when they do that, that behavioral part of the client to actually stop where it's not required anymore in the portfolio and reallocate towards segment which is required from the future point of view, not from what returns have already come in, that investor behavior is something also hybrid funds actually help to resolve.
Yeah.
And I think, people who want a little more than the debt, but don't want 100% of equity, I think for them it becomes a great solution.
Thank you so much for joining us with all those insights. That was Suranjana with explaining all those concepts to us and breaking it down, simplifying it, जिससे आप इन सारी categories को अच्छे से समझ पाएं. With that, it's a wrap on another episode of MF Banega BFF. We'll be back soon with the next episode. Until then, stay informed, keep exploring moneycontrol.com, and happy investing. Bye-bye.
Money Control at Mirae Asset Mutual Fund present Mutual Fund Banega Best Friend Forever. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.